Welcome back to Tax to You, the Practical Tax channel, where we answer all of your tax-related questions. Today I'm going to be answering the question, what's a better setup for my startup business, self-employment or a limited company? To do this, I'm going to run through the advantages and disadvantages of self-employment, the advantages and disadvantages of a limited company, and then one thing that you're going to need either way. Before we do get into it though, don't forget to like the video and subscribe for more helpful tax content. Submit your questions in the comments below and we will endeavour to get them answered either in the form of a reply or possibly a dedicated video just like this one. Check out our website using the link below, because although our aim is always to educate our clients as much as possible and share this information, we understand tax can be confusing, stressful and time-consuming. That's where we can step in and help. Check out the thousands of reviews on Trustpilot from clients who trusted us to do just that. First, let's look at self-employment. This is the simplest form that a business can take because you are essentially trading as yourself. You'll be registered as self-employed with HMRC and you'll report your income directly to them via a self-assessment tax return. Some of the main advantages of self-employment include the fact that it is cheap to set up and close down. Because you'll be trading as yourself, there's no need to set up a new entity, which means setup costs will be comparatively low. And of course, in the early days of trading, keeping your costs low will often be of high priority. If you're a startup and things don't go as planned, you may also want to close down as cheaply and as quickly as possible too. Another advantage is privacy. When you're self-employed, there is no need to put any of your financial information on public record. You will need to report your profits to HMRC and pay any tax owing, but that information is kept out of public sight, making it almost impossible for others, such as competitors or even nosy neighbours, to find out about your business's financial results. Self-employed individuals also benefit from less paperwork. Compared to trading as a limited company, there is definitely less paperwork. Apart from filing your annual self-assessment tax return with HMRC, there's often very little else in terms of paperwork, although I will point out that this is set to change somewhat in the future when HMRC introduce Making Tax Digital for income tax, which will see tax returns filed quarterly rather than annually. But for now, paperwork is minimal. Keeping 100% of the profits is another big advantage because any profits made from self-employment are taxed under income tax rules in the tax year that they arise. But because you don't have to worry about other shareholders, 100% of the profits will belong to you. Another advantage is the ability to offset losses against other income. As a self-employed individual, if you make a loss, like many people do in the early years of trade, you can potentially offset that loss against other income, such as employment. So if you are working in employment and running your business on the side, then providing you're paying tax on the employed income, you can usually recover some of that tax by offsetting the loss from your self-employment. And now, what about the disadvantages of self-employment? Firstly, there is no control over profit distribution. I've already mentioned that self-employed profits are taxed in the tax year that they arise. Even if you don't necessarily take money from the business, you would still have to pay tax on that profit. And there is no flexibility to change that with self-employment. So if you think that there's a situation where you would be better off getting taxed on those profits in maybe the next year, because maybe tax rates are set to be reduced or because you have less income in that year from other sources, which would put you in a lower tax bracket, unfortunately, you wouldn't be able to take advantage of that. There is also no separate entity. With self-employment, there is no legal distinction between the business and its owner. So if the business gets into legal trouble, the owner and their privately owned assets are also at risk. Now, in reality, this isn't usually a problem for 99.9% of self-employed individuals, but in certain professions, such as accountants or solicitors, there is an increased risk of legal action based on the advice that you give. So those industries may opt for a different setup. On top of that, expanding the structure is also difficult. If you're self-employed and you want to bring people into the business, maybe as a co-owner, then the process would be a little bit more complicated. Essentially, you would be moving into a partnership to do this, which would require a partnership agreement to be drawn up, agreed, and signed. Now, let's do the same for the limited company. Firstly, a few of the advantages. Number one is a limited company is a separate legal entity. This means that the owner and the business are not the same. Any claim you might have against the business has little impact on the owner. It's only their initial investment that would ever be at risk. Their personal assets are completely safe. Number two is more control over distributions. This one for me is the biggest benefit of a limited company, because once a company has paid its corporation tax liability on any profits, it is free to distribute that profit as and when the directors see fit. Which means if you want to leave that money within the company to reinvest or potentially distribute at a later date, you can do that. It's this element of control that will often make the limited company more tax efficient, but not in every situation. And number three, it is easy to expand the structure. If you wanted to add a co-owner or maybe multiple owners to the structure as you expand, then it's relatively simple with a limited company. Those individuals would just need to be made shareholders, which would then entitle them to a share of the company's assets and future profits. In terms of the disadvantages, it is more expensive to set up, run, and close down a limited company. Because you're dealing with an entirely separate legal entity, of course, there will be more cost involved. It's very important to think about the potential cost involved in closing down a limited company, which will usually require the assistance of a professional. There is also less privacy. This is because lots of the information about ownership and the financial performance of the company is placed on public record at Companies House for anyone to access. This includes details of share ownership, the company's registered address, and its financial statements. There is also additional paperwork. It could certainly be said that there is more paperwork involved with running a limited company. This is partly down to the fact that you've created an entirely new legal entity that has to be registered at Companies House and HMRC, but also because certain processes for a limited company require supporting paperwork, such as voting a dividend or maintaining minutes for board meetings. So now that we've had a chance to look at the advantages and the disadvantages of each, it's time you knew about the one thing that you're going to need whichever option you choose, and that is a UTR number, or Unique Taxpayer Reference. I'll link in a card to our full video explaining what a UTR number is and how to get one. Plus, you'll also find a simple UTR registration form on our website, linked below, which helps to simplify the process of obtaining one. A UTR number is HMRC's way of identifying an individual or a business. If you're self-employed, then the UTR number is linked to you, the individual, as you and your business are considered to be one legal entity. Whereas a limited company, which is its own legal entity, would have a UTR number linked solely to the company. Any correspondence or filings with HMRC will first require you to obtain a UTR number, so it's important to get this sorted when setting up as either self-employed or as a limited company so that you are fully compliant. Don't forget, at Tax2You we provide an easy-to-use UTR registration service and we'd be happy to help whatever your situation. Just follow the link below. That is all for today. Don't forget to check us out via the website and subscribe to the channel for more helpful tax content. Thank you for watching. See you next time.